Anyways, you can see time is around 10:32. Let's look into gold trade analysis. Let's look on a daily time frame analysis first. You can see the market here showing kind of huge bullish momentum, which I have already explained to you. The market here faced rejection from these levels and closed within this range. And the market came all the way to this liquidity over here. It's like this low and closed within this range. And you can see after this rise, the market formed the liquidity levels over here. This is the buy side liquidity level, and this is the range over here. This is the sell side liquidity. And within this range, the market is consolidating for 1 to 3 continuous phase rise. And you can see after this, the market formed a bullish engulfing pattern over here and continues further selling over here. So you can see this was one insider day where you could have expected the market to reach all the way to these levels. But the market formed an insider level. You could have expected the market to reach up price from these levels, and you could have expected the market to continue. And after this, you can see the market next day swept this high as well as low of this zone, guys. You can see yesterday's zone, but this was within this previous day candle itself. So either you could have plotted this another buy side liquidity level over here and the sell side liquidity over here. You see, this is the sell side liquidity. So the next day you could have targeted either this. You can see this kind of rejection of price and closing within this range. So here you could have expected the market to go higher, but you can see the market formed an insider candle, and the market here failed to sweep this high above here, guys. So in case if you consider this bearish momentum over here, the high of this candle to all the way to this low of this candle, I've already mentioned to you that the price here is facing rejection from 0.28 level out here, where price failed to close above this level. So this is the 0.38 level, where market here facing rejection and failing to close above this levels, and you can see exactly where these levels. The market formed another huge bearish candle and closed below these levels, and you can see engulfing of this previous body. So the next day you could have targeted this low, and this is unsatisfied liquidity where you could have targeted, or the next day you could have targeted it to this level over here. This is where you could have targeted. You can see the market came and here broke all these levels over here. So let's plot these levels and let's look into a smaller time frame analysis on signals. So this is one of the sell side liquidity. So there is a lot of buy side liquidity over here, where you can see after this market rejected from lower levels, formed a rejection candle, rejecting price from 21 moving average, and you could have expected the market to sweep these levels above. But instead, the market failed to sweep these levels, guys. Instead, the market broke structure towards the downside. You can see this kind of huge bearish engulfing pattern, engulfing the previous body. So clearly indicating bearishness, guys. So let's look into a 15 minutes time frame and analyze how you could have traded. So this is a huge bearish momentum, the high to low of this candle. And if you try to plot the high to low, this is a 0.38 level where the market came, rejected price from this levels, guys. So what you can see is that the market again retraced here and came all the way to this low. And the next day the market formed an insider candle. You can see within this range over here, guys. This is one range over here, and this is another range where the 0.38 level, let's not consider as of now. Let's keep it sideways, which I've already mentioned to you. So let's keep it aside. So you can see within this range, guys, the market consolidated for 1, 2, 3 consecutive days over here. So there was a lot of liquidity. You can see here the market swept the previous range over here, the buy side liquidity over here, and immediately showed some kind of rejection and clearly broke structure towards the down. So you can see a clear break of structure, or you can consider this to be a market structure shift. And again, the market retraced to the 50 levels, or if you consider this whole swing over here as the high of this candle to the low of this candle, you can see the market retraced to 50 levels and continue. But here the market failed to make a lower low. Instead, the market support here and continued further bullish. And here is where the market clearly formed a chop over here. You can see. You can consider another market structure shift over here. And the market retraced here to this level. So if you consider this momentum towards the upside, the current between this to the current candles, you can see the market retracing to the 550 levels over here. This is the 550 level where the price retraced lies. And in case if you try to plot the Fib extension levels of this momentum, the compound candles to the compound candles, so you could have targeted either the buy side liquidity, or what you can see is this shadow block level is the last up candle before it broke structure towards the downside. So it is a clear 15-minute order block. So the market came all the way to this level. Either you could have targeted this by sell liquidity or above this by like above this uh, there is a fair value gap. So you could have either targeted this fair value gap. So I hope you're understanding how you could have taken long position over here, keeping your stop losses below the 50 levels and targeting all the way towards the upside. Initially, there was a momentum towards the upside. Again, the market retraced to this level. So if you consider this momentum as the low of this candle to all the day, the market retraced to the upper trade entry zone over here. But even if you have missed out on here, guys, you could have waited for a clear market structure shift where it broke this swing high. The market came, rejected price from these levels. So what you could have expected is that either there is a fair value gap over here as well. As you can see clearly, there is some fair value gap over here. So either you could have expected the market to mitigate this zone, and this fair value gap is in confluence with optimum trade entry zone. So if you mark here, you can see this fair value gap is in confluence with optimum trade entry zone. So what you could have expected is that after this kind of huge displacement of market price with fair value gaps, you could have expected the market to come here and continue further bullish momentum. Here the market failed to mitigate these levels, guys, and you can see the market continued, and this was where the market had some room to come towards the downside and break structure towards the upside. Or if you use the anchor gap levels, yes, if you try to, you can see the market once it breaks above this level, which is the candle where you could have taken, keeping your stop loss just below this candle. So this is how we could have either entered your position and targeting it all the way towards the upside. We could have targeted this as your first target and above as the second target, and you could have tried your stop loss all the way to this level. So this was one trade opportunity where you could have taken in a 15-minute time frame. So I hope you understand this. This buy side liquidity has been taken, and the market here formed a high resistance liquidity zone over here, where the market high resistance liquidity run over here, where the market here broke the structure and aggressively formed a chop over here. So in case if the market would have not swept this high, instead the market would have formed a failure swing guys, and with broke structure, we could have expected the market to again break towards the upside. But here you can see the sweep of this previous high and rejecting from these levels and continuing further, clearly signifying the high resistance liquidity numbers. And levels like this, where there is a high resistance liquidity clearly signifies that the market sentiment is very bearish, and you should have expected the market to continue bearish only guys. So always try to know whether the market is sweeping liquidity, or you can see these are failure swings guys, where the market came, failed to sweep up to these levels. Instead, the market came all the way to this order block and continued further selling. So here there was equal liquidity. So the market came broke. Again, the market came all the way to this level guys. You can see this sell side liquidity over here, where the market mitigated these levels over here and continued further bullish. But here the market, even though here you can see this kind of huge displacement of price where clearly the market broke structure towards the upside. We consider this to be a clear market structure shift. And there was a very good displacement in price rise. So what you could have either expected is that the market coming to these levels over here, this fair value gap, or if you consider the swing compound, you can do slowly compounding this. So either you could have expected the market to come to this optimum trade entry zone over here. So this is the optimum trade entry zone, or if you consider this levels over here, this is the this level is the fair value gap. So either you could have expected here or even here as well. Optimum, but here you can see as soon as the market didn't reject price rise. So what you always need to see is that in case if the market reaches our confluence zone over here, the market found an inducement level, reach our levels and continue to show some kind of displacement. And after this displacement and the market breaking its previous high and retracing, on this retracement is where we need to take price. So see here you can see clearly the market broke structure and there was no displacement over here. But definitely you can see the market over here aggressively broke here and show some kind of displacement. So with this displacement towards the downside is where you could have either taken short position towards the downside, where the market clearly, you can see the market here broke the structure towards the downside over here. It's a clear breakout structure, or you can consider this to be a chalk formation. So if you look into a smaller time frames over here, you can see the last support has been broken over here. And if you consider the swing momentum over here, the last up candle before it broke structure towards the downside. So if you consider the high to the pound point between this to the pound point between this. So if you see this momentum guys, the market here retraced off 50 levels over here. And this is the 50 levels, and there is no point in price going to this levels over here. You can see there is no fair value gap, no imbalance, nothing else. And the market here, there was some kind of fair value gap, market integrated and again broke structure towards the downside. You can see another market structure shift after chart formation. And after this breakout structure is where you could have taken position on this retracement. So if you consider the compound between this to the compound between this. You can see the market rejecting from these levels and continuing further. Either you could have taken it at the optimum trade entry zone where the market here failed to see this liquidity over here and continued and clearly closed below this level, guys. So this is where you could have taken initially after seeing this kind of rejection candle, and for target levels what you could have done. We used to plot the fib extension levels over here, the common point within this to the common point within this, where the common point within this. So the 1.68 level is where you could have targeted. Or what we could have done is this. So the 1.68 level. So short position here, guys, keeping your stop loss just above this candle itself and targeting it all the way towards the 1.68 level. So this was one trade opportunity where you could have taken. And if you look into a 15-minute time frame analysis and see here over here, what you can see is that this was the last down candle, which it broke structure towards the upside. So if you consider this momentum as the high to the low to high of this candle, you can see the price retracing all the way to this optimum trade entry zone over here, where the market here failed to close below this level size. So this is the optimum trade entry zone over here, where market came all the way and showed some kind of momentum towards the upside. So in my live trade analysis, guys, I have mentioned to you about one trade where you could have clearly taken position over here, where the market retraced all the way to this optimum trade entry zone and clearly found a chop over here. Or you can consider a break of structure and the market retraced to this levels over here. So you can see the market here. If you consider the common point in this to the common point in this, you can see the market retrace rejecting price from this optimum trade entry zone over here. So this is the optimum trade entry zone where the price rejecting from these levels. So for target levels, what you could have then is to plot the fib extension levels, the common point between this to the common point between this to the common point between this. So you could have targeted the 100% now or the fair value gaps over here. So what I mentioned to you is the market will continue all the way to this 4.26 levels. But what we need to think is that we should always trial your stop losses this year. We can see the market here rejected from this levels and continue. So either you could have targeted this high over here or this fair value gap over here. Or if you could have targeted this double of this swing over here, as you can see. Even the market went retest to this level. So I think this 100% move, this is where I told you to take the stop position here, keeping your stop loss and targeting it all the way towards the upside. But definitely this didn't happen, guys. This is not what I expected. So you can see the market here moving all the way in sideways throughout the gauge. This is due to CPI, guys. There was some news over CPI inflation. So you can see this kind of momentum, and the news also plays an important role, guys. Whenever the news turns out to be bad, you can see the momentum towards the downside over here. So I think even news also plays an important role in this. So always keep your thought process on news also. So based on news also, there are some kind of momentums happening in market. And you can see this is what we expected the market to go further bullish because of this kind of huge impulsive momentum, and there is no point the market coming all the way towards the downside. But here the market failed to break above these levels, guys. You can see if you would consider in a 15 minutes time frame, the market here rejecting multiple times because this fair value gap has been mitigated, rejecting multiple times. And here you can see the market showed a huge displacement over here, clearly showing some kind of break of structure over here. You can see a clear break of this structure. So, but here you can see the market here failed to cross above these levels, guys. You can see the order block level. This is another 5-minute order block level where the market here failed to close above these levels. And the market retraced but failed to make an higher high here. Instead, it broke structure towards the downside, clearly changing the market sentiment from being bearish to bullish. So again, the market retraced to this 200 moving average, and you can see this kind of rejection and coming all the way to this sell side liquidity and sweeping this liquidity over here. You can see. So I hope you're understanding, guys, the sell side liquidity over here. What you can see is kind of displacement over here where price rejecting from optimum trade entry and clearly showed a break of structure over here, as how I showed you the break of structure over here. But what happened here is that, see, you can see, if you consider the common point between this to the common point between this, so you can see the market coming all the way to this discount zone over here or the optimum trade entry zones. And you could have either expected the market to continue further bullish way. So break of structure here, retracing to this optimum trade entry and continue further bullish. But what happened is that the market failed to make higher highs. You can see the market, instead of breaking these levels towards the upside, instead the market broke towards the downside levels, clearly changing the market sentiment from being bullish to bearish. Either you, in case if you might have either entered your position, you could have taken your stop loss seeing this kind of momentum towards the downside, where the market clearly broke structure towards the downside. And if you consider this momentum over here, there is no clear price action. You can see clearly there is no price action. Or if you try to plot the daily VWAP level here, you can see this candle over here broke the daily VWAP level 9 as well as 21 moving average towards the downside. Either you can expect this candle also actually breaking the 9 21 moving average towards the downside. So let's get into a 5-minute time frame analysis and see here. Clearly you can see the market here broke structure again towards the downside. This is one breakout structure. So if you consider the common point between this to the common point between this over here, the market retracing all the way to this optimum trade entry zone, or you can consider this 550 levels over here. You can see this is the 550 levels where price was not able to cross above this level price. So this is clearly a 550 level. And in case if you try to plot the fib extension levels, the common point between this to the common point between this to the common point between this, so you could have targeted it all the way to 1.68 level or this sell side liquidity over here. And you can see this kind of huge bearish candles breaking structure towards the downside. This is quite not expected as what we are thinking as. So what I'm teaching you is to maintain a good risk to reward ratio. So you can see here the market here showed some kind of huge displacement over here as well, where the market clearly formed the chart over here. So we can expect a clear chart formation over here. And what you could have expected is to expect the market to retrace to the optimum trade entry zone. So if you consider the compound this, to the compound this, the market came all the way to this optimum trade entry zone, rejected price from these levels, and came all the way to this high guys over here. You can see this high over here. The market failed to make a higher high. Instead, the market showed some kind of aggressive momentum towards the downside. So what we need to see is the 200 moving averages. So 200 moving average in a 15-minute time frame, as well as in a VWAP level in 15 minutes. VWAP level, so both showing confluence over here with this impulsive candle guys. You can see there was one momentum over here, but the market consolidated. Either you could have taken anywhere along this retracement towards the 50 levels and continued further towards the downside. So short position here, keeping your stop loss just above that candle, above this 200 moving average, and you could have targeted all the way to the sell side liquidity towards the downside. So I hope you're understanding why you could have taken. And you can see the market here after sweeping this liquidity showed a huge displacement towards the upside, and even showing a clear market structure shift guys. So if you consider the low of this candle to the high of this candle, you can see the market retraced of 50 levels over here. You see this is F50 levels where the price retraced back to these levels. So but here the market failed to make a higher high. Instead the market broke structure towards the downside. So once if this neckline has been broken guys, either you could have expected the market to reach these levels over here. You can see after this also the market shows the kind of huge displacement towards the downside, and you can see these moving averages over here. This candle over here guys broke the 21 as well as the daily VWAP level over here, or you can consider this daily VWAP level, and you can see rejection of 500 moving average. So either you could have taken position over here towards the downside, and you could have ridden it all the way towards the downside over here. So you can see how the momentum came. You could have captured all this momentum from all the way from here to here. So better looking for higher time frames and try to make decisions based on it rather than in a shorter time frame. So there are a lot of sweeps in multiple sweeps. So I'll be explaining you on Monday. So I have explained to you guys the trade analysis over here. So here I wanted to explain to you about the Tuesday trade analysis as well as the Wednesday. So even though this kind of huge momentum is where the market formed a market structure shift, price retraced to 50 levels and further showed some kind of displacement over here. You can see the market showed displacement. And again, the market came over here and continued further higher. But here the market failed to continue further. Instead, it broke structure towards the downside again. So either you could have taken a position here itself or seeing this neckline being broken and price consolidating. So either you could have taken keeping your stop loss just over that candle and targeting it all the way to next liquidity zones. So the next liquidity zone this zone over here. As you can see, this is the next liquidity zone. Or you could consider this also to be the next liquidity zone over here. So this is one sell side liquidity or sell side liquidity, or you could have targeted it this also as the next sell side liquidity. So 15 minutes time frame. So you could have captured it all the way towards the downside here. So this was one momentum where you could have captured over here. And you could have expected the market to come all the way to this level. So once if this sweep doesn't occur, as you can see, in case of the market doesn't, so displacement towards the upside, where the market needs to break above these levels, or you can consider these levels also. The market comes and continues further rise. This is the displacement towards the downside, as well as the sudden displacement towards the upside. In case if this doesn't work, you can expect the market to come to this next level size. So in Tuesday, though, there is no better trade option than this, guys. Either you could have taken here your position over here in a 5 minute time frame. I explained to you, this was the trade where I have told you to take a live. In case if you go and watch my previous gold trade analysis, I told you to take long position, but definitely you could have taken and you could have tried it all the way to this lows over here after this kind of rejection. And you can see after this, the price swept this high and from the chop over here, where you could have exited as your position with a minor profit. And you could see the market here, there is no clear price action. Where here the market broke the structure rise to this momentum. Again, the market retraced to this level, so you could have taken long position over here. But the market failed to break above these levels first. So you should wait for confirmation. Only after that you could have taken trade, but definitely even that didn't happen. So after sweeping this liquidity, when the market showed some kind of displacement rise, so sudden displacement towards the upside where the market broke this neckline over here, you can see a clear market structure shift at the smaller time frames, not waiting up this level. So either you could have taken a long position here itself, keeping your stop loss below, and you could have expected, because there is a lot of fair value gap over here, so you could expect the market to mitigate these levels and continue bullish. So you could have just tried your stop losses anyway. So entry was important. So either this was an aggressive entry where you could have taken, or you could have better waited for it retracement towards the 50 levels here, where the market retraced, but here the market further continued towards the downside, or the optimum trade entries on the fair value gaps over here, where you can see this kind of aggressive momentum. And again, rejection price from this levels and closing within the range. Clearly signifying bearishness, so you could have taken short position over here. So I hope you understand, guys. In case if you find my videos helpful, guys, please like, share, and comment. I don't think the price action here is not as well behaved as like in previous days, guys, because if you look into a daily time frame, as I told you that the market is trading between these ranges, guys. Whenever the market is consolidating, there is no clear directional bias, guys, where the market, you can see the market swept this liquidity below and closing within this range. You can see whenever you see market sweeping and closing is within this range, you can expect the market to continue further bullish, guys. So you should wait for a long position over here. So let's see, in case you can see the market, we should wait for a chop formation over here. In case if you clearly see a chop over here, guys, chop formation, or you can see the market structure shift here. Once the market clearly shows some kind of displacement towards the upside with fair value gaps or imbalance, wait for the retouch of the levels and continue further bullish. In case if the market doesn't show any displacement, guys, you can expect the market to come all the way to this levels also, the next sell side liquidity. So you can see in a daily time frame analysis, the market is trading between this buy side liquidity and this sell side liquidity, and only on this day where the market really broke structure towards the downside. And if you consider this swing momentum, the 0.38 level was here, and you can see after this kind of bearish candle is, so if you consider the high to low of this candle, the market rejected from the 0.5 as well as the 0.6 levels, the golden zone ratio. You can either expect like this also, guys. So the market rejected price from 50 levels over here. And if you consider the next day, guys, the high to low of this candle, you can see rejection of price from 0.38 level here. You can see this rejection of 0.38 level, where you could have expected price to come towards the downside. So the 50 level over here and the 0.38 level, where you could have either expected the market to continue towards the downside. So this is my trade analysis. Also, in case of the market set this liquidity and closes within range, or even sweeps this liquidity, or the next liquidity is this candle over here. So in case if the market breaks this level, there is high chance the market may aggressively show some kind of selling pressure. So let's wait and watch, guys. So in case if you try to plot the daily water, you can see, guys, the market rejecting here, here, clearly indicating bearishness. So if you look this in a 15-minute time frame, you can see the market here. So it's some kind of rejection where the market set this high resistance liquidity zones and continued bearish. Again, the market came to this order block levels and continued bearish. And you can see here the market is trading below this levels, clearly signifying bearishness in the legs. So either you could have taken position like this, or you could have taken position based upon your story, what was so, guys. In case if you find my videos helpful, guys, please like, share, and comment. and share with your friends and family members, guys. I would be explaining to you further in a better price action way. I think today was okay because of the price action was not being better forward, guys. So I'll be explaining to you in a better way also. So keep supporting my channel, guys. And in case if you want to suggest me anything, leave a comment below or Instagram is relatable. You can message me over there, guys. I would be glad to respond to you. Thank you.